News are always good to hear, but sometimes not selective news. We like to think that everything is good news. Nonetheless, the resignation of MTN CEO, they're coming as a surprise. Nonetheless, we want to have a look and see how these things affected your markets. It's the Market Pulse. It was a busy day at the JSE, but nothing really to show for it. As you can see there, a slight decline of 34 basis points, ending at 51,324 points, and the top 40 there coming in lower as well, 28 basis points at 44,300 points as well. It's not been an easy market trend, and you can tell the biggest contributor to the loss is becoming the resources sector, which has taken a little bit of a nosedive. If you looked at your platinum stocks, you would be very, very upset looking at Lonmin there as well. Somebody also resigning there, and the COO, and that also did not receive good market responses. As you can tell that the markets and the resources there are taking a little bit of a nosedive as well. So it has not been a good day for executives, particularly in the industrial companies, including the likes of the resources sector, in the likes of Lonmin as well. So a very, very tough market indeed. If you look at the JSE miners, you will see there that platinum price being hit really hard, and I know some of the market commentators talking about the fact that they're starting to retreat again. I'm still a little bit optimistic, but nonetheless, $962, that's how the platinum miners performed. And if you look at your gold miners, they're also going down. So it's not like there's security, because you can see gold miners are still looking for options elsewhere, and that's why the price has shot down slightly a little bit there. Not necessarily anything bad, but for the moment, definitely something to have a look at. There's your dollar, the US dollar against the rand, and it's doing relatively well. The rand there being up by 36 basis points again, 12 rand 94 cents to the US dollar. So still very much strong. The pound also 15 rand and 77 cents, and the euro as well at 13 rand and 67 cents. So overall, the currency, the domestic currency there, doing relatively well against most of the currencies in the world. And looking at your commodity prices there, the most important price to look at is the Brent crude price, which is up by 38 basis points. Now, that $55, $56 a barrel of the price. Nigeria, the reason why they're in this recent problems that they're facing right now, they pre-sold their oil at $40 a barrel, not anticipating the fact that this price will be sitting where it's sitting currently. So when you start seeing those stocks not necessarily doing well, particularly in the oil industry in Nigeria, that's the reason why they're being hit hard, because of the fact that that prices continues to surge and move up into positive territory. We don't talk about these things much, but there are experts who sit in front of the screens of the JSE to watch the market for us. We have this evening Mr. Tony Modise, who's our regular speaker here on BizPulse. Tony, another tough day for the JSE. Not necessarily great on growth, not necessarily great on the platinum stocks either. Everybody's is having a heart attack with regards to those prices. What went wrong?
Hi, Clive. It's been a very bad day for the markets. I mean, considering the fact that, the South African economy has shrank by 0.3%. If you could look at 2016, it went up by 2015 rather, it went up by 1.3%. But either way, emerging market stocks are still trying to push up the rand, as they're still having a bullish trend. Markets are really starting to absorb the year's rate increase this month. And also, Asian investors have already started executing trades considering Trump's tax cut in infrastructure spending. Chinese stocks also rose by 0.2%. This also adding some traction to sort of the economy. That leads the rand to have a bullish trend. And China is one of the biggest consumer of South African economies. We're hoping as time goes by, our economy will be on positive territory, and also the JSE as well will be on positive territory. On an export point of view, if the rand becomes too volatile, we could experience a decrease in export as buyers prefer buying from markets with steady currency. So we just have to pay a little bit of attention to that.
That's quite interesting. That's Tony Modise speaking to us, telling us about how the market's shut. Thank you very much, Tony. We really appreciate your time. So it's all news indeed. It's time for us to have a look at your top story. In what could be seen as a huge jolt on Africa's biggest mobile operator, CEO of MTN South Africa, Mteto Nyati, has resigned. He will be resigning this month. He will be replaced by Godfrey Mutsa on the same day as well. MTN Group reported a $108 million annual loss last week, its first in 2 decades, hit by the regulatory fine in Nigeria and unfavorable currency moves as well. Mr. Mutsa is currently a vice president of the South and East Africa region at MTN Group and has more than 10 years of experience in the mobile telecoms industry. Mutsa was previously CEO of Vodacom in Lesotho and the Democratic Republic of Congo, and more recently Chief Officer at the Consumer Business Unit at Vodacom South Africa. MTN also has a rough ride in Nigeria when MTN agreed to pay a fine of about $1.1 billion over a missing deadline to cut off unregistered SIM cards. ANN7 spoke to MTN and they had said they reserve comments at the moment, and further instructions on communication will be given tomorrow at 10 a.m. Telecom expert Stephen Ambrose joins us now over the phone to give us some sort of reaction to the resignation of the MTN CEO. Stephen, thank you and welcome to the show.
Thank you. Thanks for giving me the opportunity.
Stephen, you can't say it's been an easy ride for MTN. Evidently, a tough year, tough 2016, fines in Nigeria. But not only that, having tough times to get their money back out of Iran as well. And market conditions not being favorable for this particular company. And now the resignation following that $108 loss in terms of revenue. Is this a sign of some technical issues that are taking place within South Africa's favorite cell phone operator?
No, I don't think so. I think it was unfortunate timing for MTN. This type of opportunity, Robbie Fenter has been talking a long time about collapsing the structure at Altron and changing, the shareholders have been pushing for a big change there. And they were looking long and hard and actually mentioned that they would be announcing a new CEO in the next couple of days. And guess what? They basically found somebody with great corporate experience, with great experience across multinational companies, and basically snapped him up. And I think it was probably, as Mteto Nyati said, a deal that was just far too good to ignore. So MTN's loss is definitely Altron's gain. But I don't think it's reflective of what's happening at the MTN Group generally. I mean, MTN has had a terrible year, a torrid time, and the whole mobile industry has changed dramatically. The good old days of printing money, basically charging whatever they wanted and unlimited growth are gone. Voice calls are dropping. The data growth is enormous, but it's not nearly as profitable as SMS and voice. And this is a global phenomenon. This is happening across all mobile networks globally. The fines in Nigeria, the fact that they've struggled in sort of more strife-torn areas like Iran has really not helped them enormously. But, you know what they say in business, no risk, no reward. And generally, it's been a really solid company for many, many, many years. And the structural changes that Mteto brought to MTN South Africa, and a lot of them have been replicated across the group in Africa, are paying dividends. There's no question there. Subscriber numbers are up. They've turned things around in South Africa, and the hope is that the new incumbent will continue some of the good work and certainly help drive, profits at MTN in the next year. I believe for technical reasons they will probably swing back into profit next year, but it's a tough game. It's very competitive, and it's something that they're going to have to pay particular attention to. So I think it was bad timing, but I don't think it's reflective of anything particularly dire in the entire MTN structure.
Thank you so much, Stephen Ambrose, tech expert there, helping us analyze and react to the resignation of MTN Group's CEO for South Africa as well, Mr. Nyati. South Africa's domestic product growth rate shrunk to 0.3% in the fourth quarter of 2016. The quarter-on-quarter results in the final 3 months of last year were weakened by underperformance in the mining and manufacturing sectors. According to Statistics South Africa, South Africa's economy grew by 0.3% in 2016 compared to the 1.3% that it enjoyed in 2015. The Treasury is expecting a growth this year of 1.3%.
So, starting with GDP from the production side, the headline number in the fourth quarter was a decline of 0.3% compared to the third quarter of 2016. This is a decline from the third quarter, and year on year the growth was 0.7 fourth quarter of 2016 compared to the fourth quarter of 2015. And as you can see that for the year of 2016 the growth was 0.3 compared with 2015. Sector gold and other metal ores such as platinum and iron ore. As I've mentioned, you will see that the growth in mining, while it's a decline of 0.1, it's a much lower growth compared to, I think, the growth that we have seen in the first 3 quarters of 2016. Just look at the breakdown. The largest contributor, as I've said, was your miscellaneous goods, contributing 0.7 percentage points with a growth of 5.9. Clothing was up 10.4% with a contribution of 0.6 percentage points, and your food and non-alcoholic beverages was up 2.4, contributing 0.5 percentage points.
So, joining me now in studio is Chief Director of the National Accounts from Statistics South Africa, Mr. Michael Manamela. We also have with us Mealani Mkabela, who's Chief Economist at Antiswa Group. Gentlemen, welcome to the show. I'll start with you, Michael. It's very hard to deny that South Africa had a difficult time in 2016, but nonetheless, in the final quarter, normally, like we saw in 2015, it picks up because we have a rush, we have a Black Friday, we have higher exports. We expect that it would actually be better in the final quarter. We created 250,000 jobs. What happened?
Yeah, I mean, I think it's kind of a common story there. If you look at the growth in the fourth quarter, it's primarily coming from your services sector, and that includes your trade. So if you look at trade actually grew in the fourth quarter.
Yeah.
The industries that are actually contracted were your primary sector, which is basically your mining, and partially the secondary sector, which is manufacturing. But if you also look at that, you'll find that in 2014 we also saw 2 quarters where the growth was negative, which is the first quarter and the fourth quarter, whereas in the second quarter and third quarter we saw positive growth rates. If you look from the household perspective, household consumption actually grew by 2.2%, which also relates to the increase that you see in the trade sector. So from a household perspective, there is increased spending, and the decline is really coming from your commodity kind of industries.
Yeah. Mealani, when you look at those numbers, 11.5% of that decline was contributed by the manufacturing and mining sectors. Now, if we talk about jobs, those are the ones, one particular industry that actually pull a lot of jobs and create a lot of jobs in the market. What does this tell us about what happened in the fourth quarter?
The impact in the third quarter has a lot that I've been trying to as well assess, but broadly, I think we need to diagnose deeper and understand what are the fundamentals that are causing this. One of the things that we have projected or on our forecast is to see the reaction of mining companies on the coal buy within the relationship of coal suppliers and Eskom. And earlier this year, our forecast was mining companies are going to respond to the call of Eskom of wanting to buy coal at a lower price. And for unreasonably, we start to see coal having low production. And this might be a drive towards making sure that coal become expensive, and that will be one of the strategies that like mining companies are doing to counteract the situation of selling coal to Eskom at a lower price. That is one, and of which probably we will need to manage this, and then we build up with this story very well because it's very unusual. The second part is you will understand that like at the last quarter of like 2016, you will find emerging markets not doing well, and you wouldn't expect them to be probably procuring a lot of our PGMs of platinum group metals and gold because they are the consumers much of that.
Yeah.
But in the first quarter of 2017, we started to see emerging markets like manufacturing coming up, and then first quarter for 2017 we expect that to grow in terms of the consumption of PGMs and the consumption of gold. But with coal, we might still see coal having a problem of underproduction because coal companies, they are not happy with the figure that Eskom need, and that can be an issue in question now as what will be the outcome of coal. Last year mining in Daba, I was there, we have been looking at that. This year mining in Daba, my partner was there, and then we have been focusing on that, and coal mining producers are not happy much with that, and that might have been a factor causing a lot of things. Probably I can say Competition Commission might need to look at that element and see what will be happening in the story of coal in South Africa and the companies that are doing that, because it can come to all consumers. If coal becomes expensive, electricity will be expensive and consumers will have a problem.
Yeah.
The tertiary sector performed very well, as you indicated, and we expect that to happen.
All right. So, Michael, let's talk about the collective of the information that you had, the different sectors. Can you take us through the process of collecting all data and getting it presented as you did this morning?
Yeah, we've got quite a large contingent of staff who actually, engage business on a daily basis, starting from your agricultural sector and running through your different mining companies, manufacturing companies, electricity companies. And we've got different surveys, your monthly surveys, which basically gives you kind of forward indicators about what the performance of the economy would be. Yeah. And then you've got your quarterly surveys. We also have extensive annual surveys that we do, which we use on an annual basis to actually revise your annual estimates. So it's quite a large team of about, I think, 500 people who actually works and collect this extensive information. And once we've got all of that, obviously the economists sit together, put the numbers together, looks at different indicators, looking at different prices that has to be used for deflation, obviously take into account your seasonal variations in terms of the economy, and obviously do a bit of analysis about whether the numbers correspond with what is expected, and in the end then go through the various quality checks in the organization, and then get a final sign-off.
Michael, thank you very much. Mielani, thank you very much for coming through to the show. We really appreciate it.
Welcome.
That was, I guess, the Chief Economist at Antiswa Group, Mielani Mkabela, and the Chief Director of the National Account of the Statistics South Africa, Mr. Michael Manamela. Social Development Minister Bathabile Dlamini has taken responsibility for the SASSA crisis. She apologized this afternoon at the department case before Parliament's Standing Committee on Public Accounts today. The minister dismissed insinuations that she was arrogant and avoided accounting for the saga as well.
I think this thing has been discussed a lot. People raising their feelings, but also making something that has not happened as the truth. saying that on the 1st of April, we won't be able to pay grants. So what we thought we had to do was to apologize, firstly, to the Constitutional Court for everything that has the commotion, misunderstanding, and that the people are unstable because of the reports they have been getting. Never mind that we've been saying we will be paying on the 1st of April. Never mind that the technical team had set to discuss the matter and made their recommendation.
I hope the apology will be welcomed by all South Africans as the Minister humbled herself there. Today's learning word is a time for us, obviously, to learn something new, and it's your Learning Pulse. Our learning word for this evening is autarky. Autarky is a nation or an entity that is economically independent and self-sufficient. That's the word for this evening, autarky. Do you know what the options available to you when resigning from a pension or a provident fund? Well, tonight we will detail all the options available, and we are also going to be discussing investment options in terms of tax implications and various restrictions that are available for you. We welcome our special guest this evening, who is always here to help us. It's Mr. Mduduzi Lituli, who is going to be assisting us with unpacking this particular issue of pensions and retirement. Mduduzi, welcome.
Always a pleasure to be here. Thank you.
Mduduzi, when we get, I call it the 3 R's. It's a retrenchment, resignation, and resigning.
Yeah.
So what is it that one can do when having obviously a pension already as benefits?
I think we all know currently with what's happening with the SASSA debacle, and I touch on that because it points to an employment issue in our country where you've got 7 million taxpayers paying for the grants of 17 million people. You just talked about economic growth. We can't even do 1%. And why I'm highlighting this is that for the majority of people, the best way to build up wealth will actually be their retirement funding.
Yeah.
For most people in the country, it's probably the longest investment that you'll ever have.
Yeah.
And I think if you look at the stats, it's actually very sad that more than 94% of South Africans retire without enough. And I think the biggest driver of that is not because so much of the investment strategy, but because of the options people take when they resign or leave their employer. And what we typically see with most people when they resign from a pension or a provident fund is they take the money, they say, please employer, pay it into my bank account. Because you know what, it's life, you always have problems.
Yeah.
So you want to close debt, and what do people tell themselves? Well, I'll start again, I'll start again. But not understanding the tax implications of that. You know, if you resign from a pension fund or a provident fund, you only get the first 25,000 Rand tax-free. And that's once off over your whole lifetime. And that can range, now the tax implications can range from anything from 18% all the way to about 204,000 plus 36% tax.
Jeez.
That's number one. It's a huge tax burden if you keep withdrawing.
Yeah.
The other part is the shorter your investment term. So if you keep starting over and over, then what you find yourself, which is what happens to most people, is you find yourself late in your 40s, you sit with someone like me and they tell you, look, if you want to retire with enough, you have to save about 40% of your salary.
And no chance.
You know what I mean? And there's no chance.
Yeah.
So I just want people to consider that there are other options.
But you can work until you're 80.
You can work until you're 80, but you know, who wants to work until they're
No.
80? You know what I mean? So just look at the other options. You can look at a preservation fund.
Yeah.
And if you transfer from a pension fund or a provident fund to a preservation fund, what that is, it's sort of like you're storing it away, like the name says. And that transfer is tax-free. You can speak to a wealth manager such as myself to put together an investment strategy for you. So that money is not just sitting there, but it's invested. What's very important to note about a preservation fund is it usually inherits the rules of the pension or provident fund that you're coming from. But so the most important thing there is that you can't access the money before retirement. So earliest age 55. But a retirement does give you at least one withdrawal prior to retirement, up to 90% of your capital. So there is sort of that you can sort of access it, but you shouldn't.
Yeah.
The sort of the drawback of a preservation fund is that you can't contribute to it. So if you leave your employer and you want to have your own private retirement fund, you put in a preservation fund, you can't do monthly contributions. But then that's where you would look at a retirement annuity, because you can transfer your funds from a pension fund or a provident fund to retirement annuity. And a retirement annuity is just like a pension fund, but yours. And what I mean by that is there doesn't have to be an employer there. You own it.
Yeah.
You can contribute to it, but obviously you can't access the funds prior to retirement age. But the biggest thing there that I always tell people is that, especially those who are being taxed 45%, you get a tax rebate for having a retirement annuity. So it's very tax efficient, and it's a fantastic strategy for growing your retirement benefits, and it's protected from creditors. So if you do get in debt, they can't take the money from your retirement.
I know you're on Twitter. What's the your
at Luthuli Capital?
At Luthuli Capital. And that's how we get a hold of you. Anything else?
At Luthuli Capital, you can go to our website, luthulicapital.com, or you can send me an email to duzi@luthulicapital.com.
Thank you very much, Luthuli. Did I say Luthuli?
Luthuli,
yeah,
I'll
it's fine. I can call you Luthuli, mate. Yeah,
I'll take it.
That was Duduzi Luthuli of Luthuli Capital there, talking to us about things you have to watch out for when you're going on to pension. Very, very important information. And sometimes we take these things for granted, so it's important that we look after ourselves.